Welcome back. Hope you're having a fantastic day. Let's take a look at the markets. They've been all over the map here the last couple of days. We're going to talk about Bitcoin, crypto, stock markets. Right now, it is 11:30 a.m. Eastern Standard Time as I'm recording this on the 29th of April, as you can see down at the bottom there. But the NASDAQ is down 1.5%, S&P 1.5%, the Dow Jones almost 1%. Yesterday was a big day. The Dow Jones closed up 500 points, and right now it's been down as much as 300 to 400 points today, but kind of all over the map, up yesterday, down the next day. And what that is market uncertainty, bear market activity. Most of the markets are in and or approaching bear market territory. We'll take a look at that in a minute and see what's on tap. And again, a lot of it is the headwinds that we've been talking about. Number one, inflation, that's the biggest headwind. There was another print that came out today for the Fed, their biggest indicator. Consumer price pressure indicator that they looked at that was up 5%, the biggest that it's been in a while. So the Fed absolutely has to come out guns blazing to get a hold of inflation. And it's their favorite indicator. The inflation gauge rose 5.2% in March. As worker pay fell further behind personal consumption expenditure prices, including food and energy, the Fed's preferred inflation gauge rose 5.2% from a year ago. So that's a big one. That's consumer discretionary spending. That's what drives the economy. We are a consumption-based economy. And if the consumers have less discretionary income to spend, obviously that's going to create a slowing economy. The interesting dilemma that the Fed is in right now is that we just had our first negative GDP print. Granted, it wasn't much in a while. So theoretically, that leads to recession concerns, slowing economy, and now the Fed has to tighten into a potentially slowing economy, although the Fed doesn't believe the economy is slowing because inflation is their biggest issue that they have to tackle. Again, the Fed's mandates are twofold. One is low inflation and full employment. So they need stable prices and full employment. That's the Fed's two mandates. They have to keep inflation in check around that 2% benchmark, and they have to keep unemployment down into the low single digits. That's kind of the Fed's mandate. And right now there's obviously more jobs than there are workers, which is keeping pressure on prices as well as other issues with the war, things like that. But the headwinds are inflation, number one, number two, Fed policy and the mistake that they've made. And they're going to have to now, since they've lost credibility, stick with their guns to correct and control inflation. They're going to have to reduce the balance sheet into a potentially slowing economy, which could create, recessionary conditions. You have the China lockdowns going on, which is going to affect supplies and things like that. Last year, we had to do Christmas shopping by October and get it all done to make sure that your stuff was here on time. This year, it might be even sooner. May have to have it done by the summer. So something to keep an eye on. And then obviously you have the war in Ukraine and potential escalation. The longer the war goes, the worse it is for Russia, the more potential there is for the war to escalate into potential nuclear conflict, World War III, and the government is threatening that, and they're hyping up the rhetoric more and more because they're becoming more and more desperate. So that is a real risk, real tensions over there. So we'll just have to keep an eye on that and see how things go and watch for potential escalation. So those are the things that the market is dealing with and digesting. And the valuations in the tech sector is really a lot of what's dragging the market down. Valuations all across the board in the bull market. So this is Bitcoin on the hourly over the last couple of days. A lot of volatility here, a lot of uncertainty, but this trend line, and we're going to take a look at the daily in a minute, is what Bitcoin is wrestling with that I've been pointing out in the last couple of videos and has not been able to get above for any length of time. So a couple of trends I'm watching, and again, the trend is your friend. You always want to go with the trend. And right now, this is not a bull market trend. This is actually bearish market price action. This right here is bull market activity. This is a bullish trend. This is a bullish trend. And this is a bullish trend. these little consolidation periods, whether they're declining or rising, are not bullish trends. These are, uncertain trends and things like that. So I like to use the closes, and I do like to use trend lines, not because this is going to guarantee anything, but because these are technical levels. Trend lines represent support and resistance. And these are the technical levels, not the wicks, but the closes that the algorithms are based off of. So the algorithms are automatic trading formulas that are used by institutions, a lot of whales, a lot of investors using algorithmic formulas, all kinds of different types of formulas. Some are buying across different exchanges, exploiting inefficiencies in price between the different exchanges. Some of them are high frequency trading, and some of them are just if this, then that, or if this, then next type formulas. So that's why closes are important. That's why trend lines are important, because trends are technical levels that the algorithms and the formulas are based on, as well as psychological levels for investors and things like that. Right now, 40,000 is a big psychological level for Bitcoin. That is the line in the sand for Bitcoin that it has to close above and stay above in order to expect any kind of bullish continuation. And again, your last lower high that was put in is right over here at 51,000. So until Bitcoin gets above 51,000, which would represent that 618 to 702 retracement level that we've been looking for on Bitcoin. Let me remove that real quick. So if we look for the retracement levels that we've been trying to track here on Bitcoin, that 618 to 702 is right in that $58,000 level. So really, until you get above that, you can't look for, a bullish continuation. And really, this last lower high here at 51 is at the 0.5. That's a critical level. Again, another psychological level. So if price gets above that, you can look for it to continue on to the 618, 702, 786, last line in the sand, on for more upward continuation. But the trouble with all this is just like with the traditional markets, with the Fed reversing course and raising interest rates, reducing the balance sheet, and slowing down the economy to destroy demand to get prices back in check. It's kind of hard to expect prices of risk assets to continue to rise like they were over here when you had an accommodative Fed policy. So the Fed pulled the plug out from under, or pulled the rug out from underneath the economy right here in this area, or at least started indicating that they're going to have to do something about inflation. Over here, inflation was transitory. Over here, the Fed is, we're going to have to fight inflation. And more specifically, right here, when Bitcoin was making a little bit of a run, that's when the Fed really signaled that they're going to have to do something. And traditional markets have done the same thing around the same periods of time. And, a lot of volatility approaching, well, the Dow's not quite there yet. The Dow right now is down 9%. So not even into correction, 10% correction territory. The NASDAQ has been in bear market territory. Definition in traditional markets of a bear market is 20%. NASDAQ is in 21%, is down 21%. So it's in a bear market territory. And again, what we've been talking about is the potential for recession, which is just negative GDP for 2 consecutive quarters. So not a huge thing in terms of, risk there, 12% down on the S&P. So not quite bear market territory yet. So let's go back to Bitcoin, because for me, what I'm looking for is, number one, it's hard to expect, for me anyways, and for a lot of institutional investors out there, any kind of a new all-time high for any of the markets, traditional markets, Bitcoin, anything else, until the Fed reverses course and pivots. So the Fed's not going to do that until we go check some of these lower levels that were put in. Really, if you look at the traditional markets, right about here, back to on the Dow, the last time the Fed pivoted, the markets were down about 30% from the highs. So for the Dow Jones, that's back into March 2020 areas of price action. For the NASDAQ, probably the same thing back in that March 2022 timeframe. Yeah, just coming out of it before the real bull market there. So when you go back and look at, like we looked at before 2017, 2018, when the Fed, 2018, when the Fed did raise interest rates the last time, they let the market sink about 30%. If you look at the pandemic, the Fed let the market sink 30%. So basically, until markets sink about 30% across the board, you can't really expect the Fed to jump back in. And even if they do sink 30% like we just looked at, that is still not major cause for concern for the Fed. The S&P is the one that's the closest back to the pre-pandemic peak. So on the S&P, 30% would put you right back where it was before the March 2020 decline. The Dow Jones, 30% from the peak, is below that level. So that's back about midway into the drop. And then, of course, NASDAQ was the same thing that we looked at. And Bitcoin, is a different ball game in and of itself because it dropped down to that 3,500 level. So what do I want to see before I have any kind of confirmation that we can be off to new highs? For Bitcoin would be a test of this $29,000 level. So we looked for a bottom in this range that we're in right here of 35,000 to hold before we retraced, and then went off to more of a consolidation. And Bitcoin has not reached those levels of retracement that a lot of people have been looking for, that 618 to 702 in that mid $50,000 range. It just hasn't been able to get there. It has not been able to get above $48,000. And it's been respecting this trend here, this technical level of the 40,000 that we're at right now. It hasn't been able to get above that and close above it here recently. So you have to expect Bitcoin to go down and start testing some of these lower ranges, these $33,000 ranges where it wicked down to. And then ultimately the last low after the bull run of 2021 was $29,000. So I want to see $29,000 hold before I become bullish to the point to where we're looking for a new all-time high. I think if price gets down to 29,000, holds and rebounds off of that, then you could see the potential, especially if the Fed is pivoting at that point from a monetary policy standpoint. Let's see where that puts us. If Bitcoin dropped 30%, you're right down to that $27,000, $29,000 range, at least from where we're at now, not necessarily all-time highs. And typical Bitcoin bear markets, are 70%, something like that, 80%, which is down into the $20,000 range for 70%. So not so sure it can get down there, although there are a lot of technical indicators that are lining up that would say that Bitcoin could get there. So again, the biggest issues right now are, moving averages below pretty much all the moving averages on a daily basis, and on the weekly, getting ready to test this 100-day moving average. And as we know, whenever Bitcoin is played with that on the weekly 100-week moving average, if it loses that, it always goes down and checks the 200-week moving average, which has been the backstop. So right now, every time Bitcoin has lost that 100-week moving average, it goes down to check and bounce off of that 200-week moving average for its entire history. Every single time, that's where it's gone. And that's been the bottom for Bitcoin. Each time it's done that, of course, there were some wicks down, but that's been the closing bottom. So right now, where would that be if things continue to roll over and Bitcoin continues down and tests that 200-week? The longer it goes, the higher it gets, but that's around that 24,000 range. And then some wicks could get you down to that 20,000 and test a previous all-time high. If Bitcoin gets down there and tests that 20,000 range and then bounces, then you could expect, really nice rebounds from there. The other thing that we're going to take a look at is this Gaussian channel. So the other indication is that when the Gaussian channel, this is on the weekly, turns red, that's when you're definitely going to see, price drop from the bottom of that channel. We've looked at that a couple of times, somewhere around 30% on average. And depending on where it's at when it happens, if the Gaussian channel continues on in this range before it drops, let's take a look at where 30% down from there could be. That would be in that $24,000, $25,000 range. So there's a lot of confluence in that $20,000 to $29,000 range that price could potentially get back into. Another thing to look at are these areas where Bitcoin has been green before the Gaussian turns red. Initially, it was 908 days. The second time was around 840 days before it turned red, and when the Gaussian channel was in the green. Then it extended to 1,001 days, so that's an extra 150 days. So if we say it extends another 150 or 200 days, where does that put us right now? It's been in the green for about 1,000 days. So if you say add another 100 days to that, 50 days to that, that puts you out into the June, July timeframe, which is interestingly enough where the price bottomed out the last time. So we'll just have to see how that plays out. Right now, price is well below the weekly midline on the Gaussian channel on the weekly. And every time it's done that, it goes down to check the bottom and break below it a little bit each time. So we've looked at that. So there's a lot of technical indicators that are saying that the price could reach that mid to low 20,000 level and potentially go back and test that previous all-time high at 20,000. There's just a lot of technical indicators lining up saying that price could potentially do that. And when you start looking at all the altcoins, all the major cap altcoins, price action's looking somewhat similar to Bitcoin, although it has detached here lately where altcoins are kind of diving and Bitcoin not so much. So if you look at the total three right now on the daily, total three has been kind of downhill. And if you look at the Bitcoin dominance, kind of going up. So altcoins are weakening while Bitcoin has been strengthening a little bit. So we'll just have to continue to watch those things and see how it goes. So remember, trend lines aren't anything more than technical levels. They show support and resistance, buying, selling, things like that. That's why I like to watch the closes on the trends. The trend is your friend. You have cycles, you have ranges, and you have trends. Bitcoin's been in a bull market cycle since existence. Obviously, it started from zero. It's been uphill ever since. Within that macro bull market, there's been ranges where there's been cycles, the 4-year cycle, obviously, where price peaks and valleys in those 4-year cycles. And then within those cycles, there's ranges. And right now we are trading in a range between that 34,000 wick low to a 48,000 high on Bitcoin that we've seen so far in this recent range that we're in. 48,000. So those are the areas that we are, kind of keep an eye on looking for. Anything below that 33,000 wick, we can look for more downside closing basis. Anything above that $48,000 close on the high, we can see the high sides, but more specifically the $50,000 top, $30,000 bottom in terms of the wick down to that last summer close. So until we get down there, test that, rebound, and get off of that, I'm not convinced that we can look for new all-time highs yet. I think we need to revisit and check some of those lows to put in the support, make sure there's enough interest in price at that point. The problem is there's no interest at price at these levels right now, especially from an institutional standpoint. They want a much lower entry because of the risk reward. There's too much risk right now versus the reward. And at the end of the day, you want to make sure that you, do not risk capital that could be used to take advantage of a bigger bull run later, just to get a little bit of a range price action now. So risk reward, it's all about risk. It's all about preservation of capital. It's all about having the capital to participate in a future bull run later versus wasting your ammunition now. So those are the things that I'm looking at, and I will see you on the next video.